Hello, hello, hello. No sound, no sound. I'm so sorry. I'm so sorry. All right. There's a lot going on. There's a lot going on. Right? There's a lot going on. All right. Sorry. All right. We're back. We're back. Right? Are we back? Hello, 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 hello. All right. So we still are waiting for Clover to start speaking. Very quickly, I'm going to share with you something. Share this tab instead. Ladies and gentlemen, it is an honor and privilege to share with you that Clover Health is going to grow 37% for 37% growth rate in 2025. Do you understand what that means? America, do you see? All right, there it is, okay? That's number one. We are so back. We are so back. Number one. Number two. Let me go down here. Total stockholders' equity. Look how much we went up by. We're making money. Number three. My favorite. Here is the Clover Health Investment Corporation consolidated statements and cash flow. We take the net cash flow provided from operating activities and subtract it from purchases of property, plants, and equipment. We subtract that and we get a free cash flow of $33.29 million, which means Clover Health, for the first time ever, positive free cash flow 2024. Let's go. My apologies, my mic was not working, but let's go. Let's go. All right. So now let me go ahead and hear this. All right. It's the earnings is happening. Let's listen and let's learn.
Health. Please go ahead.
Please let me know if you hear it.
Everyone, joining me on our call today to discuss the company's
Do you hear it?
full year 2024 results are Andrew Toy, Clover Health's Chief Executive Officer, and Peter Kuipers, the company's Chief Financial Officer. You can find today's press release and the accompanying supplemental slides, as well as the company's most recent investor deck, in the Investor Events and Presentations section of our website at investors.cloverhealth.com. This webcast is being recorded, and a replay will be available in the Investor Relations section of the Clover Health website.
Free cash flow!
That we may make forward-looking statements during today's call that are subject to risks and uncertainties, including expectations about future performance. Factors that may cause actual results to differ materially from expectations are detailed in our SEC filings, including in the Risk Factors section of our most recent annual report on Form 10-K and other SEC filings. Information about non-GAAP financial measures referenced, including a reconciliation of those measures to GAAP measures, can be found in the earnings materials available on our website. With that, I'll turn the call over to Andrew.
Today. 2024 was a pivotal year for Clover. We set out with a clear mission to drive sustainable growth, achieve adjusted EBITDA profitability, and reinforce our differentiation in Medicare Advantage. And I feel we have executed very well in delivering on these goals. Firstly, during 2024, we delivered meaningful full-year adjusted EBITDA profitability. We previously shared that achieving this would position us to return to growth during a period where our competitors would be retreating. This profitability and return to growth has happened as anticipated, and we believe our profitable core of returning membership cohorts sets us up well to invest in bringing on significant new membership every year. Secondly, we surpassed 100,000 Medicare Advantage members this year during AEP, reflecting well above market year-over-year 27% growth and a 95% AEP retention rate, proving that when members experience the Clover model, they stay. And more importantly, we achieved this growth while improving clinical outcomes and cohort performance, all of which are a testament to our discipline in managing the total cost of care and driving to better outcomes. Thirdly, we've again strengthened our star ratings. We now have over 95% of our members in 4-star rated PPO plans for the 2025 star rating year, with nation-leading clinical measures highlighting our commitment to delivering higher quality care. As a reminder, the financial effect of this 4-star rating will be enjoyed next year in 2026. Practically speaking, this means higher benchmarks for our plans, which will flow through to top-line PMPM revenue, even more competitive benefits, and long-term stability for our members. Fourthly, we successfully launched Counterpart Health, our software business that houses Clover Assistant for third-party partnerships, where we brand it as Counterpart Assistant. We signed and implemented our first external partners, built a scalable multi-tenancy cloud platform, and established a pipeline of additional potential customers spanning both providers and payers. The market is validating what we've known all along. Technology-driven care management isn't just a feature of MA, it's the key to making it sustainable. These achievements reflect the exceptional dedication and hard work of every Clover team member as we collectively strive to enhance healthcare for seniors via the earlier identification, management, and treatment of chronic diseases. While we are very proud of our results, we're even more enthusiastic about what's to come on our journey to care for more and more of the Medicare population. As we step into 2025, having established meaningful full-year adjusted EBITDA profitability in 2024, we're not just carrying momentum, we're operating from a position of strength. The core drivers of our business are aligned and accelerating, and we're well positioned to execute upon our strategic goals during our next phase of growth. We will continue to actively manage care while lowering costs via our differentiated technology-first care model. Our wide network, PCP-led, technology-driven approach remains our core advantage. Unlike traditional MA models that rely on health system-based risk sharing, we enable PCPs to succeed in value-based care while remaining on a fee-for-service chassis. This ensures broad access for seniors, stronger physician engagement, and better cost performance over time. Clover Assistant technology will, of course, be the core of our strategy. Our proprietary software platform delivers real-world clinical and financial impact. Advances in data interoperability and AI only serve to accelerate our platform. Because our results are built upon delivering AI-driven insights to physicians, the tremendous rate of improvement in these technologies create tailwinds to Clover in a way that traditional health plans do not experience. During 2024, more than 2/3 of our members received proactive, data-driven, and personalized care through Clover Assistant, which continued to deliver over 1,000 basis points of MCR improvement for returning MA members whose PCPs use CA as compared to those who do not. In 2025, we'll continue to invest in enhancements to evolve CA with AI-powered automation and further enhanced EHR integrations, making it even more impactful for physicians at the point of care. While CA helps enhance the performance of our wide network PCPs, home care remains a critical and distinctive component of our differentiated care model and complements those wide network PCPs with CA-powered care directly in the home. Designed to engage with our highest risk members, our home care program does everything from gap closure to post-acute care to integrated care for polychronic patients at the end of life. When we do this, our data also shows that our highest acuity cohort of members receiving home care experience significantly improved MCRs over time. This demonstrates that intensive, proactive care delivered in the home is a highly effective strategy for keeping members healthier and out of the hospital, and blunting the medical cost trend for our most acute and comorbid members. This is precisely why during 2025, we intend to further scale our home services to ensure that care for our members is delivered at the right time, in the right setting, and with measurable impact. And lastly, Counterpart Health is no longer a concept. It's an emerging business with significant upside potential. We have a growing pipeline of partners, including payers and health systems evaluating CA. They see CA as a strong tool to help them improve value-based performance for their wide network, but we also see health systems evaluating it for their own employed physicians. We have invested for years in building a software product that drives clinical quality, and we feel that our core technology DNA, plus years spent iterating and improving within our own Medicare Advantage plan, have created a unique and differentiated offering. We believe the opportunity here is great, and in 2025, we'll focus on closing additional deals in varied markets that validate the broader scalability of our model. Overall, in 2025, we're committed to maintaining adjusted EBITDA profitability as we also invest deeply in further increasing total lives under management and meaningfully growing top-line revenue. We will also be investing in growing our Clover Assistant reach within our markets and in new markets, as this lays the groundwork for managing that larger membership. We believe that this balance of strong profitability from returning member cohorts, together with our strategic investments in new member growth, Clover Assistant technology, growing Clover Assistant's reach, and expanding both our home care services as well as the Counterpart Health go-to-market strategy, positions us well for acceleration of profitability in 2026 and beyond. I'll now hand it over to Peter for the financial update.
Thank you, Andrew. I am very pleased with our strong 2024 results, and I'm excited about our growth and momentum in 2025. Our 2024 results demonstrate our capacity to execute effectively, achieve our objectives, and generate strong business momentum. In short, we accomplished precisely what we promised and more. I will begin with our 2024 results covering our strong revenue growth, achieving meaningful profitability with industry-leading loss ratios, our progress on cost optimization efforts, and lastly, our strong balance sheet position. Clover's fundamentals are strong. We continue to achieve strong insurance revenue growth during the year, growing 9% in both the fourth quarter and full year 2024 to $331 million and $1,345 million as compared to the prior periods, respectively. Complementing our strong top-line revenue growth was continued year-over-year margin improvement. During the fourth quarter of 2024, our insurance benefit expense ratio, or BER, improved to 82.8% compared to 87.4% in the same period of 2023, and our insurance MCR improved to 73.5% in the fourth quarter this year from 82.4% last year. We also experienced modestly favorable prior period development, or PPD, during the fourth quarter, which is similar to what we experienced during the third quarter, and this favorable development has effectively lowered our full-year BER. That said, BER for the full year 2024 was 81.2%, and MCR was 75.1%, both of which represent strong improvements of more than 500 basis points year over year. Overall, our results were driven by strong cohort economics and returning member retention, as well as our ability to deliver earlier and better care outcomes for our members. Our technology-first care model has continued to manage medics in our results. Additionally, the meaningful incremental impact from Clover Assistant and our home care platform in our results this year occurred slightly earlier than anticipated and led to strong MA plan margin outperformance during the year. This resulted in an immaterial minimum MLR rebate in 2024 for 2024 data service, which effectively lowered our revenues. As a reminder, any payment related to the rebate would not occur until all claims have been fully incurred in the future. That said, we believe our full-year BER, adjusting for the aforementioned favorable impacts of TPD, is a good representation of the underlying performance of our business and a solid foundation for the company heading in 2025. Focusing next on SG&A. Consistent with the expectations we signaled in last quarter's call, SG&A expenses were higher than usual in the fourth quarter, given the strategic choice we made to support the recent AEP season, as well as various quality-focused investments aimed at improving member outcomes. These investments paid off and drove strong growth in the recent AEP season, resulting in 27% membership growth in the AEP period itself. We believe that this growth is driven by the strength of our benefits, star ratings, and our care platform. As such, during the fourth quarter, total SG&A increased by 7% year-over-year to $150 million, and adjusted SG&A for the fourth quarter of 2024 increased by 9% year-over-year to $86 million. For the full year 2024, total SG&A decreased 7% year-over-year, and adjusted SG&A of $295 million decreased 1% as compared to the same period in 2023. While we did have increased costs to support our growth and strategic reinvestments in the fourth quarter, our full year 2024 results benefited from the cost-saving initiatives we have discussed throughout this last year. Taking all of this into account, GAAP net loss from continuing operations for the fourth quarter improved by $46 million to a loss of $21 million as compared to the same quarter last year. Similarly, adjusted EBITDA significantly improved to a profit of $8 million this quarter compared to a loss of $17 million in the fourth quarter of 2023. For the full year, we meaningfully improved our adjusted EBITDA profitability by $112 million compared to 2023, achieving over $70 million of adjusted EBITDA in 2024, driven by our well-managed returning member cohorts, elevated favorable PPD amounts that we do not expect to recur, our differentiated ability to better manage the total cost of care via technology, and a continued focus on SG&A optimization. Turning next to the balance sheet, we ended the fourth quarter of 2024 with restricted and unrestricted cash equivalents, and investments totaling $438 million on a consolidated basis, with $152 million at the parent entity and unregulated subsidiary level. Consolidated and unregulated balances during the fourth quarter were impacted by the final $39 million cash payment to CMS for the final settlement related to our ACO REACH participation in 2023. As a reminder, this is the final payment related to this discontinued business, and we expect no future impacts to our financials. Cash flow used in operating activities from continuing operations for the fourth quarter was $47 million and was impacted by various working capital dynamics, as well as a continued normalization of our IBNR levels, which continued to decrease in the fourth quarter by approximately $11 million quarter over quarter from the third quarter in 2024, bringing our full year cash flow from operating activities to $82 million. Our strong business momentum continues to improve our already strong balance sheet this year, allowing us to operate from a position of strength and invest in growth. Next, I will provide commentary on our full year 2025 guidance. The revenue for the insurance business is expected to be between $1,800 million and $1,875 million, reflecting continued strong year-for-year top-line growth of 37% at the midpoint of the range. Medicare Advantage membership is expected to average between 103,000 and 107,000 members, reflecting 30% growth year over year at the midpoint as compared to 2024. We expect adjusted SG&A to be between $355 million and $365 million. This represents adjusted SG&A as a percentage of total revenue of 19 to 20%, and is an approximate 200 basis point improvement year over year at the midpoint of the range. We expect full year 2025 adjusted EBITDA to be between $45 million and $70 million. Additionally, beginning this year, we are guiding to adjusted net income of between $45 million and $70 million. We believe that this is a useful metric for investors, and it is also used by others in the industry. Lastly, we expect insurance BER for the full year 2025 to be within a range of 87% to 88%. As a reminder, we believe our insurance BER is a solid representation of the total cost of care for our MA members, and it includes our proactive investments in quality improvement. Going from 2024 to 2025 profitability, here are the bridging items that I will cover in more detail later in this call. First, the 2024 results included elevated favorable PPD amounts that we do not expect to recur. Second, investments in new membership growth year over year of 30% will reduce our year over year adjusted EBITDA and adjusted net income, as year one members typically have an over 1,000 basis points higher loss ratio than returning members. Third, we expect an increase in adjusted EBITDA and adjusted net income contribution from existing member cohorts as they continue to show an expanded profitability profile despite broader industry headwinds. Fourth, as a result of our new membership growth, we will experience increased variable and growth SG&A accordingly. We are also increasing our investments in Clover Assistant technology and Clover Assistant Reach. These increases in SG&A will partially be offset by our cost efficiency program that I will discuss in more detail later in this call. In totality, we believe that this balance in 2025 of existing strong profitability from returning member cohorts with our investments in new member growth, Clover Assistant technology, and Clover Assistant Reach, coupled with our improved 4-star rating, positions us strongly for acceleration of profitability in 2026 and beyond. First, on our cohort dynamics, please turn your focus to slide 6 in the earnings deck posted on our website. Our new member growth during AEP, driving our guidance of 30% year-over-year average membership growth in 2025, primarily occurred within our established core markets where we have strong Clover Assistant coverage and are confident we can deliver strong clinical results. Within the new member cohort from this AEP, the vast majority of our growth came in the form of switchers from other MA plans. This nuance is important because MA switchers typically have more health data that we are able to equip physicians with as compared to other types of new members. Furthermore, we achieved impressive membership retention this AEP, and we're very pleased with the dynamics of our returning membership cohort. We also look forward to continuing to execute against our growth engine over the next month during the current OEP period, where we remain on track to deliver a strong OEP season as a result of the previously mentioned disruption that began during AEP, as included in our full year 2025 guidance. During 2024, we demonstrated a clear ability to achieve profitable existing member cohorts, and we plan to continue to prudently manage these returning member cohorts going forward. In 2025, we will also see the impact of a large cohort of new year one members in our financials. Given that it takes some time for our care management model to be effective with new members, both clinically and financially, we expect to see this new member cohort increase our loss ratio in year one. Given our experience over the last number of years, we have strong conviction that the unit economics of the cohort of members that joined this year will have improved loss ratios of around 700 basis points in 2026. We have included a graph of our cohort economics on page 6 in our earnings deck. This illustrates a more than 700 basis point improvement in MCR between year 1 and year 2 cohorts, and an approximate 1,500 basis point improvement between year 1 and year 3 cohort members. This shows the strength of our model, delivering earlier and better care management at lower total cost of care and higher affordability. Next, I will give further context to our SG&A expenses. We categorize our SG&A expenses in different buckets, including quality initiatives, growth, variable, and fixed SG&A costs that we manage accordingly. Quality initiative SG&A includes technology-focused R&D innovation to further expand our product roadmap, as well as spend directly tied to enhancing healthcare quality for our members. Growth SG&A includes costs that scale with membership growth, such as the cost to acquire new members, including marketing, branding, and broker commission costs. Variable SG&A includes costs that scale with a growing member base. This includes costs for our BPaaS partner that optimizes our back office MA plan operations. Fixed SG&A includes spend related to employees, infrastructure, and vendor costs that we're able to leverage to achieve scale. Our results in 2024 have already started to reflect this, giving us meaningful operating leverage to enjoy as we scale further in the future. Beginning this year in 2025, we have implemented a new efficiency program for SG&A to streamline our operations and identify further efficiency gains within these different SG&A buckets. Our optimization efforts here will be in tandem with incremental strategic investments to further improve our Clover Assistant capabilities, grow our home care program, and expand our Counterpart Health go-to-market efforts. Taking all of this into account, a full year 2025 guidance for adjusted SG&A represents a decrease or an improvement of around 200 basis points for adjusted SG&A as a percentage of revenues at the midpoint of the range in comparison to full year 2024. We have placed additional focus and continued efforts on cost optimization with a goal to further reduce SG&A as a percentage of revenue in the future. Lastly, we remain excited about Counterpart's ability to bring our model of care into other geographies in a capital-light and efficient manner, where we do not currently have an MA plan established. This initiative is still in its early stages, as we had not even announced general availability yet at this time last year. That said, our priority in 2025 will be first to rapidly expand the total lives covered by Counterpart Health. We were thrilled to announce a multi-year partnership with Southern Illinois Healthcare earlier this month, as well as our partnerships with the Iowa Clinic and Juke Connected Care in 2024, and we expect momentum for Counterpart Assistant to only increase this year. We look forward to sharing more detailed expectations in the future as we further develop and grow our Counterpart SaaS and tech-enabled services offering. While we are not providing specific guidance for 2026 today, we are excited about our strong positioning for acceleration of profitability in 2026 and beyond. First, we believe we are well positioned for strong and above-market membership growth in the upcoming AEP season later this year. Second, we believe that we are well positioned with tailwinds going in 2026 due to an increase to a 4-star payment year in 2026. Third, we expect the unit economics of our new cohort of membership added in 2025 to significantly improve into 2026. Fourth, continuous maturing and improving member cohort economics of members who joined in 2024 and before. Fifth, we expect an increased impact of the cost efficiency program in 2026 and beyond. With that, let me now turn the call back to Andrew for closing comments.
Thanks, Peter. Clover is indeed very well positioned for success as we move into our new phase of growth. In the years to come, we're excited to bring our technology-first model to as many people as possible while maintaining strong profitability. Our investments into growth, Clover Assistant technology, and our differentiated model will be both strategic and judicious to ensure that we have plenty of room to run as we aim to increase overall business value for Clover. What makes Clover different has and will continue to remain the same. We aim to actively manage and deliver care as we equip more and more physicians with technology to identify, manage, and treat chronic diseases earlier. As early intervention not only benefits the patient via reducing the need for extensive treatment, but also helps flatten the medics curve and lowers the total cost of care. This differentiation is also our fundamental advantage that sets us apart, and why we believe we are positioned better than ever to execute against our vision in the coming years. We'll continue expanding our impact, driving better outcomes for our members, achieving financial discipline for our business, and delivering long-term value for our shareholders. Now, with that, let's open it up for questions.
Thank you. We will now be taking questions from Clover's research analysts. At this time, if you wish to ask a question, please press star 1 on your telephone keypad. You may remove yourself from the queue by pressing star 2. In the interest of time, we ask that you please limit yourself to one question and one quick follow-up. We will take our first question from Jonathan Young with UBS.
Hey, thanks for taking the question here. I guess I know we are early in the Counterpart Health story, but kind of when can we start expecting to see some of the revenue metrics kind of show up into the financials? And, what's your expectations for this year in terms of pipeline growth?
Hey, Jonathan. Thanks for the question. So regarding Counterpart, we are very excited by that business. We have a strong pipeline, as we said in the remarks. We are not yet saying when we're going to be incorporating that into the revenue and into the financial results. Of course, it's a newer business, as Peter said during his section. And the way that we're looking at it is that we are really looking at it as a way to expand our reach, first of all. So we're looking at bringing more lives under Clover management, which is a key KPI of ours, and under Clover Assistant management. Those economics will eventually become significant, we believe. But right now, of course, the core of the financials are being driven by the MA plan itself. So look for more announcements on launches. Certainly look at more for more partnerships. We'll be talking a little bit more later this year, I think, about how we see the lives growing under management and the clinical results. And then I think you'll see the financial side come a little later.
Okay, thanks. And then just on the G&A load, kind of as it's a little bit higher than what we were thinking. I guess how much is kind of the cost related to the AEP growth that you kind of saw? And then as we kind of think about 26, it sounds like you're going to grow a decent clip. Are we going to experience that kind of a similar G&A pickup in relation to that? And how much do you think you can lop off via the G&A optimization efforts? Thanks.
Yeah, thanks, Jonathan. This is Peter. So from an SG&A perspective, the growth SG&A is a significant portion of the SG&A growth year over year. Wanted to point out, though, that we already are scaling and having some leverage, right? So the guide at the midpoint for SG&A for 2025 represents about a 200 basis points improvement, if you will, if you measure SG&A as a percentage
or revenue, but we do have growth expenses in there. Variable expenses, we're optimizing as well, and we think that for this year, our fixed SG&A is actually slightly down year over year. We are, of course, executing on an efficiency program, but directionally from a growth going from 25 into 26, you would expect a similar direction, but I would say at a lower rate of increase.
Good, thanks.
And once again, if you would like to ask a question, please press star 1 on your telephone keypad now. We will move next to Matt Hewitt with Craig-Hallum.
Hey, Matt.
Hi, thank you for taking our question. This is Tolf Corman from Matt Hewitt. Could you please provide some color on your expectations for continued growth of the home care arm in 25 and beyond? Thank you.
Yeah, absolutely. So this is highlighted as an area that we're very proud of. Our investment into care being delivered with Clover Assistant in the home, I think, is an anchor stone of our entire strategy. Looking after the most expensive, most comorbid, most vulnerable members in that home care program is a critical aspect of how we do total cost of care control as well as improve outcomes. As such, we are planning to invest more into that arm. We are bringing that capability into new markets and expanding that team and expanding its capabilities and expanding its geo reach. So we don't have a specific guidance around that, but you should expect that to be a key part of our strategy and to see that total cost of care control flow into our financials as well.
All right, thank you.
And once again, it was star 1 if you had a question. With no other questions holding, this will conclude the Q&A portion of today's conference. I would like to turn the call back to Andrew Toy for any additional or closing remarks.
Great. Thank you, too, for the questions there. In closing, I'm proud of the Clover team's many accomplishments this past year, including adjusted EBITDA profitability and corresponding strong membership growth to start the year, our improved star ratings, of course, and our efforts with Counterpart. 2024 was a defining year for Clover Health, where we continue to reinforce our competitive advantages within MA. And as I've said before, this is just the beginning. I look forward to updating you all on our progress during our next call. Thanks again for joining today, and everyone have a great evening.
Thank you. Ladies and gentlemen, this concludes today's Clover Health fourth quarter and full year 2024 earnings call and webcast. You may disconnect your line at this time. Have a wonderful day.
All right. Hello. What's going on, everybody? All right. So first off, smash the like button. Smash the like button if you enjoy this. All right. So we're going to go in and do an analysis right now and conglomerate everything we talked about. And there's going to be even a more deeper analysis because I'm going to listen to the earnings call again so I can jot down some notes, right? Let me just go lower this for a sec. Okay. So very quickly, let me go ahead and share the screen here so we can get this. First off, holy moly, we have 422 watchers on X. And we have 315 watchers on YouTube. That's about 737. Almost sounds like 747, doesn't it? 737 viewers. Guys, the viewers are increasing. And you can look at this as an indicator, which basically tells you and should show you that this is slowly going to start to increase volume into this company. Many people are watching us right now. Okay. Folks that are watching, hit the like button, smash button, whatever. Smash the like button on both YouTube and Twitter to help with the YouTube algorithm, okay? Let's see here. I'm not able to read. I'm going to try to go through all the comments. Let me see here. Okay, so I appreciate you. And also Laz, bye-bye. You know, the people voted, right? The people voted. Okay, so a couple things we wanted to, we have a lot. We have a lot to talk about, okay? Oh yeah, Al I have said it before, and I'll say it again. Join your lifetime membership is one of the most valuable investments I ever made. I appreciate you. I appreciate you a lot. And we're here, baby. We're here. Okay, so let's go ahead and pull up Clover to see how it's doing right now. One moment here. Let's look up Clove. So we're at $4.20. So that's really good. Interestingly, Alignment Healthcare also reported earnings, and it's right now up about 9.13%. But again, it's been oscillating in these prices. So I'm not really, it's going back to how it used to. NVIDIA reported earnings yesterday, and it's down today 8.48%. So I need to figure out kind of what's going on in the market. Today seems like a bloody market. In fact, if we go to our proprietary All Stock Trades Premium stock terminal, and if we just go ahead and just open up this right here, what I would like to do, just really quickly, if you let me here, go to sector performance, and holy shit, holy crap, look at this. So today's a red day. Today's a really bad red day, and it's really bad. Technology really took a hit. So I'm sure Palantir probably was down today. Yeah, down 5%. And you remember I told you about the momentum indicator? First, let me just bring this back open here. Let's go back to the momentum indicator, MTUM. Let's go to the momentum. Momentum-wise, I want to go back here. So yeah, so we're like kind of trickling down at the 50-day moving average. So we could be consolidating at the 50 and potentially we'll raise back up, but right now momentum's down. So it makes sense why we're not doing that well. But even with the downwards market, we're still up 1.44% in the after hours market. So I just wanted to kind of do kind of an analysis from the market perspective. I'm going to smash the like button. Definitely go ahead and help us with that. So we're going to go ahead and do that and do this. We're going to go deeper in our analysis. Very quickly, if you guys, I'm going to show you our software. We have our own proprietary stock terminal. Normally, Bloomberg terminals cost $2,500 a month. Ours is one-time payment. That's it, lifetime access. And you can see this is how it looks like. So we're going to be using our software right now to analyze this data. Okay. So now that we have this, let's exit this. Okay. I want to talk about these two things. First, the first one here, okay? So switchers have medical data. So strategically, Peter, the CFO of Clover Health, he went ahead and he said that it's very interesting that a lot of our membership growth was because of switchers. And beautifully enough, switchers have medical data, which means that their medical cost ratio won't be as high normally if it was just a brand new patient with no medical data, which is kind of interesting. So that's an interesting remark, right? So we'll talk about that, but I just wanted to mention that there. Okay. So they have about 1.37 billion, 9% year-over-year growth for 2024. Adjusted EBITDA was positive 70 million. Net loss, there's still net income negative, but still an improvement. Interesting. Okay. BER is a different metric of how to analyze profitability of an insurance company. Their insurance BER is 81.2%, but their insurance MCR is 75.1%. Now, I think they're going to end up using BER instead of MCR. And I think this probably has to do and deal with CMS. It might as well artificially make it bigger. But now let's go ahead and just do the difference between 81.2 subtracted from 75.1. So what is the difference? Again, this is like hard math. I wouldn't recommend. I don't think this will be accurate. But if you subtract the difference, you get 6.1, a 6.1 difference. The reason why I say that is because if you look ultimately at the insurance BER, it's going to be between 87 to 88%. Let's say 87.5 to take the halfway point. So if we take 87.5 subtracted 0.6.1, this, what they're saying, is an MCR of 81.4% using the MCR jump difference from BER to MCR. So an MCR next year will be 81.4%, which is pretty better. It's better than the MCRs of Humana and all of them, the 89%. So this is still good. This is still good. Obviously, the BER increased by 6 or 5. So I assume this will also increase by 6 or 5, right? So does that make sense? Does that make sense? Also, insurance revenue increased by 37%. And our intrinsic value calculation that we went ahead and did that, we did 27%. So we're going to do this right now to see what is the price target of Clover. And we're going to go ahead and we're going to make it as accurate as possible. And we're going to make it pretty damn accurate. Okay. So we'll go ahead and do that. Switchers, because of Humana United Healthcare, closed a ton of plans in New Jersey, and the 4-star bump is huge. Yes, sir. You're absolutely correct. I love the terminal, Al. Thank you so much for all you do for us. Al Stock Trades for life. Okay. So still needing a $700 coupon. I am Jewish and Polish. Never pay retail. Well, okay. How about this? Okay. So to all of my people of Israel, one of the first members were people from Israel, actually. You've been through a lot. So reach out to me at al@alstocktrades.com. And all of our lovely people of Canada, definitely, because we are going to be ending the flash sale. So take advantage of that, right? But I wanted to tell you thank you for all of you guys, okay? Right? So Al is providing service platform that we as stock market enthusiasts can truly get ahead and change the projection of our future. Thank you, Al. Thank God for this time, people. I appreciate. I love you all, right? And what I'm getting out of it is, imagine going to sleep knowing that people are making money and they're able to feed their families and live a better life in terms of being able to afford things. So I'm living on cloud 9. I'm living on God's path, right? So. All right. So now that we went ahead and talked about this, so MCR, I'm tracking it to be 81%, but they're doing the BER, which historically is larger and more than the MCR, just the way it's calculated. And we can make a video about how it's calculated. Okay. So there's that. So we talked about that. Now let's go ahead and zoom in a little deeper here. This is their report. You can find the Clover Investor Relationships website. It says Clover Health report fourth quarter full year 2024 results, provides full year 2025 guidance. Now, very interestingly, in the call, Peter went ahead, the CFO of Clover, the full Clover, not the CFO of the MA version of it. The full, by the way, their MA CFO came from Humana, so that's pretty interesting, right? But I lost my train of thought. Oh yeah, so he basically said that 2025 we're going to be adjusted net income, but he said 2026 we are going to be full profitable. We are going to be full profitable. Ladies and gentlemen, what did I say in yesterday's video? What the hell did I say in yesterday's video, right? So let's quickly go back. These are all the terminals, right? Let's go back to Analyst estimates. It's still beta. We're going to be importing it into the quantum charts soon, hopefully today. Let's open up Clover, and this is all part of the Al Stock Trades terminal. Normally, a Bloomberg terminal costs around $2,000 a month. Ours is one-time payment. It's with the $500 coupon code. It breaks it down to $2,500 lifetime access. This will soon become $15,000 lifetime access. But let me show you something really cool here, okay? If we go ahead and hit quarterly, and then we go ahead and look at the net income stack, ladies and gentlemen, actually, let's go to annual. Let's go to annual. Ladies and gentlemen, look at the net income stack. Here for 2025, we're going to be negative, right? Negative 60 million. That's what analysts are projecting. This is 2025, 2026, 2027, and 2028. These are, okay, listen, when you get a Bloomberg terminal, you get access to the analysts talking to each other. The problem is, as a retail investor, you're not sitting inside of the Wall Street building to know exactly how they're communicating, which is why they call it Wall Street. There's a big wall that separates the normal day Main Street Americans in the world, the rest of the world, in correspondence to what people are behind the curtains of Wall Street. This software that I created allows you to be inside of this wall. So what they're saying here, analysts are saying that, yes, Clover will be profitable in 2026 with a GAAP net income of $24 million. Now, it could be more given what we have now. But what I'm basically trying to communicate to you, ladies and gentlemen, okay, what I'm trying to communicate to you is that our platform was able to predict, given what Wall Street is speaking amongst each other, we're able to pick up that noise and you're able to see it, and it can be democratized to all of our members that are in lifetime access. So you see how powerful it is? So you essentially, we were able to figure out they were going to be profitable in 2026. And today in the Q4 2024 earnings call, Peter, the CFO, confirmed that yes, we are on track to profitability in 2026. That is incredible. Okay. So now let's first off, let's exit back, go back to the normal screen here. And now let's go back here. Okay. So now that we talked about the profitability side, now let's go ahead and talk about the full year guidance, because that's the big one here. Okay. So they increased their MA lives by 30%, and they're going to have anywhere between 103 to 107,000 lives. The revenue now is going to be anywhere between 1.8 to 1.75 billion, which is a 37% growth year over year. That is incredible, because that's going to end up being on our intrinsic value calculation. And I'm going to just take the halfway point of this later on. I'll tell you, I'll take the halfway point, and that'll be the revenue I achieve. Let's not go too low. Let's not go too high. Let's just see it in the middle, right? They're going to be EBITDA profitable, and they're going to be adjusted net income profitable. This is incredible news to see. Okay. We're going to go ahead. They were positive cash flow for operations. We're going to go ahead and talk about that. Mm-hmm. We're going to just zoom in here really quickly, do the zoomies. Stockholders' equity has increased. Okay, so this is the consolidated statement of cash flows. I wish they had one for the quarter. They're going to go ahead and file to the SEC, and our software will be able to pick this up, and we'll know exactly. And I'll be able to look at the document myself. But what you want to do here is, I'm more conservative. I like to take the operating activities from continued and discounted, but you don't need to do discounted, right? Discounted is just things that they're real. So we're not going to use this number, okay? So I'm going to just put a strike through. So discounted is, operations that are not going to be. They essentially divested from this, right? So what you want to do is you want to take the net cash from continued operations, which is $82.4 million, and subtract it from 1.5, right? And what you get is $80.894 million. So this is $80.894 million for the total free cash flow of the whole year. Now, if you don't recall, last year, for Q1, Q2, and Q3, they had around 118 million of free cash flow. So it did go down. So what that tells me is Q4, it was negative free cash flow. Q4 was negative, sadly, right? But altogether, for the whole 9 yards, they were positive cash flow. Now, they touched a little bit about this on the earnings call. They specifically said that, the SG&A is high, and so they're looking at that right now. And I'm going to have to re-listen to it, and so I can get better insights for you. But ultimately, so now we have to calculate how much of the revenue goes to free cash flow. So to do that, we have to go ahead and do a couple of math related itemizations. So I'm going to go ahead and copy this. I'm going to copy that, right? Hold on. I'm going to copy that, right? And then what I'm going to do now is I'm going to go to our stock terminal, and I'm going to just take a screenshot. Okay. This is our stock terminal here. What you do is you can put like Tesla, look at the, sheets for Tesla. We do Clover, and we take a screenshot, right? And then what I'm going to do then is I'm going to take the screenshot. I'm going to put it here. Okay. So then what I'm going to do is I'm going to go to the fileization here they have, and I'm going to go to the quarter. So what was the revenue that they had for this quarter? I like to go to the one on top. 33's this one, right? 330. Okay. So I'm going to go here. This was Q4. I'm going to go ahead now and add Q1, which is, you can read it here, is 346.45 plus 356.24 plus Q3, which is 330.99. And I'm just going to add this one at the end so you can see it in order. So when we do that, we get $1.3 billion. I know they said, what do they say? 1.7. It's 1 point in my books. It's 1.3 billion, right? 6, not 7. I'm going to be lower because that's just how I do it. Okay. Right. They must have rounded up or whatever. I'm just going to keep this number. It's lower. I like to be conservative. So what you do now is you take the free cash flow of their full year of 2024 and divide it by the total revenue, and you get 0.059. You multiply that by 100 and you get 5.9%. So now let me go ahead and go back, okay? Ladies and gentlemen, if you go back to my videos from 2 years ago, what did I tell you? To estimate future free cash flow, we take 5% of the revenue, and that will estimate future free cash flow. A lot of people made fun of me. How can you take 5%? How can you take 5%? Because I've done it with over 1,000 companies. That's how I know, right? I have over 10 years of experience. And ladies and gentlemen, lo and behold, now we got 5.9% of the revenue that has translated into actual reality-based reality free cash flow. So now, why is that important? Because now we can do a couple things. So keep this thought. Now what I want to do is I want to go bring the intrinsic value calculation. I'm going to go ahead and put Clover. And I'm going to go ahead and I'm going to put 9.33% growth rate. Or what was the growth rate they said? 9%. It's 9.33. We'll put 9.33. And then our full year free cash flow is 80.89. 80.89. So as of today, this is how much Clover should be worth. As of today, with $80.89 million of free cash flow with a 9.33% growth rate, Clover should have a bull case of $3.50, a base case of $2.56, a bear case of $2, and a recession of $1.17. So as of today, the bull case should be $3.50. So I wouldn't be surprised if the stock price dropped. But hold on. They gave full year guidance. We know that they're not going to grow at 9.33% anymore. That we know. You see how the box highlights is pretty cool, isn't it? Right? I designed that. Very excited, right? So we know that they're going to grow more than 9.33%. So do you want to add that to the mix? So let's go ahead and do that. But before we add that to the mix, we have to estimate what the future free cash flow is going to be for next year. And to do that, we need to see the revenue. So we're going to go back up to the estimation. They said 1.8 to 1.87. So let's go ahead and put 1.8 plus 1.875. We're going to open up a new tab. We're going to add these and we're going to divide by 2. So this is the number. And then we're going to multiply by 1,000 because we're going to turn it into millions. So that means for the year of 2025, revenue should be $1.8 billion. So 1 billion, so 1,837 millions, right? So we're going to multiply that now by this number. And when we do that, we get a free cash flow of 108.945. You see how it's lower than 118 million? Remember I told you, as I get more data, my calculations become more accurate and accurate. They just get more because I get more data and I'm able to, like a surgeon, strategically cut around the margins. Okay. So now that I did that, now let's go ahead and put 108.945. Let's go ahead and take this and let's put it here. Okay. But wait, there's more. Before I hit submit, we're going to go back to the earnings page, and it's a 37% growth rate. You see that? 37%, ladies and gentlemen. So now I'm going to add 3.7. So right here, I'm going to be setting a price target for Clover for 2025. Are you ready? Let's go ahead and hit submit. It calculates intrinsic value. Holy shit. Holy crap. Okay. Bull case, 713.9% upside. Base case, $22.65, a positive 447.2% upside. A bear case of $16.26 with an upside of 292.8%, and a recession case of $7.54 with an upside of 82.2%. Now, if you want to go ahead and say, Al, let me be conservative. Let me just use this free cash flow instead, and let's see what it is. Okay, that's fine. We'll do the lower free cash flow of this year. That's a bull case of $25, a base case of $16.82, and a bear case of $12 with a recession of $5.60. Ladies and gentlemen, are you seeing the money? The money's going to go brrr. You see what I'm saying? Okay. But in respects to the calculation of the average of 5.9%, we will put this here. We'll update projections, and this is the price target. It's right here. Okay. So now you know why the analyst asked, what about SaaS? Because SaaS is not included in these calculations, right? It's not. So what that basically means is that these numbers can only get better. Holy moly. You understand? Exactly. There it is. Someone just said it. And this is just insurance. Ladies and gentlemen, if you want access to the best stock terminal in all of Wall Street that's the most affordable, we have a $500 coupon code flash. We are not just courses. We give you an educational platform, an educational division to teach you what these numbers mean. We have a research division regarding equity analysis from an educational perspective. And 3, you get access to the most affordable, high quality, Apple-like stock terminal that exists in the world. You have institutional access at the palm of your hand. Do not take it from me. Take it from the many lifetime access members across the whole world, from the United States to Canada to Central America to Europe to the Middle East to China. We are everywhere. Even in Russia, we are everywhere. Let's see here. Let me go ahead and Sai joined TikTok. Thank you so much for. Yeah, I'm trying. It's not going to be as freaking as the other ones, but I'm trying. Let me see here. I'm cool with those numbers. Update outstanding shares. So the outstanding shares, what would they be overall? The outstanding shares. I mean, I would have to let's go to our other stock terminal here. And by the way, you have access to all of this too, and access to over $44 million of net worth from our community. We have a community of multimillionaires. Let me go ahead and update. Let's look at the share float for Clover. This is our proprietary brain machine. Yeah, I mean, I see outstanding 501 million. What is it now? I mean, is it not this? This is from the recent SEC filings, right? This is what I got recently. So we'll see right now what the updated one is, and the system will automatically update it. Another thing is, what do you think is going to happen? What do you think is going to happen when what's my computer? Sorry about that. That's weird. What do you think is going to happen once Clover goes up to $30 plus? What do you think is going to happen to our wheel strategy when you're making anywhere between 3 to 7% per month? Because this is a growth stock. What do you think is going to? There's going to be people making $500,000 to $1 million a month in our platform. You understand the power of it? There's going to be people that are going to be real estate Mongols. This is the vision that I wanted to. This is what Wall Street's doing. They print money. It's like market cycles. This is market birth. Then there'll be death. But don't worry, we'll know when death will come. We'll be ready for that too. So let's see here. So, you know what's funny? So I have a family. So I have a background of both Jewish and Middle Eastern in my family. My significant other is actually Palestinian. And I come from a Jewish / Catholic and even Muslim type family. And even me and my lovely lady who's Palestinian, we work together like this. So I would say the big thing is we need to democratize this information for everyone, and we all need to work together, right? Let's see here. So 4 stars sure does help. Wait till 4.5. Yes, sir. Your PT is 14. Let's go. 502. Yeah, guys. I mean, 502. Watch. Let me show you. You go to the intrinsic value. So watch. The bull case is 33.7. You change it to 502. Watch. From whatever it was, 501. And the bull case goes from 33 to 33.60. It dropped by what is that? 6 cents. It dropped by 6 pennies. I mean, 6 pennies. So that's why I'm like, whatever. We'll just wait for it. 6 pennies is 6 pennies, right? I mean, yeah, pennies are pennies. But 6 pennies. But yeah, 502. Yeah. If it was like 540, 550, I'm like, whoa. I mean, that might change some stuff, right? But real talk, how stock trades changed my life, and all of you did too, right? What do you think is going to happen? So, what do you think is going to happen to my pants when gonna be real estate Mongols soon? Absolutely. I'm Eastern Orthodox. My family's from Greece and Lebanon. Yeah, there's so many. People have a misconception. A lot of Middle Easterns also in the United States, a lot of them are actually Catholic and Greek Orthodox. You know what I mean? Interesting. Al, do some cat memes. Oh, yeah. Right? It's so funny. I thought it was much more. No, yeah. It's not a big deal. Not a big deal, right? Maybe the stock-based compensation soon. If it hit 30, I will dump on my boss office for resignation and upload the video here. Watch your mouth. Like, why are you late? Watch your mouth, mister. You make it in a year. I'll make it in 1 month. Options. Watch your mouth. What I still don't understand is why would anyone sell? Dude, you tell them. I've been saying this I have over 700 videos, man. Like I'm guys, you can look at my old videos and now I've aged. I don't know why people would sell, but it's okay. Take their shares. Give me our shares. Give them to me. I celebrate diversity all the time. I love it. I hope we get a bit of bounce tomorrow. If not, I'm gonna go hurt a little bit. Me too. I gotta cash secured put. I'm gonna have to roll that out of the cover call because remember I have the FU money supply and I have the large stockpile. Super impressed by CLOV by the net. Oh hell yeah. But yeah, buy Maseratis, but not the platform. Right. All right. Well, listen, guys. So there's that, right? Right. So we did this. We did the intrinsic value. What else? We'll do more of a deeper dive in other videos. Okay. So now here's the quantum charts. Let's go ahead and load up Clover. Look at that. Good. Clover's falling. Let's do the support and resistance. So there is a $14.13 level of support. It basically was protected here. It's at $14.14. So this could be the bottom for Clover. We also have a strong level of support here around the $4 and $4.04 region. So we could look at that. This is our quantum charts. Again, this is all people have access to the lifetime access of our premium stock terminal like I was talking to you about. We can go ahead and do Fibonacci sequence retracements here. We're looking at $4.01 there as a strong level of support, but we did bounce off of this Fibonacci at 412, so we're at 414 now. So potentially this could be it, guys. We could be bouncing there. On the hour chart here, support and resistance, we could go back down to 398. We'll see there, but off of the Fibonacci sequence retracements here, yeah. So we're looking at pretty much there. Let's go and do advanced technical analysis for all utilizing our AI engines. We have a bullish score of 3 and a bearish score of 2. We got a downtrend on the minute and the hour, but an uptrend on the daily, weekly, and all times. Ladies and gentlemen, let's go ahead and run 25,000 simulations simultaneously and turn on my fan. This is called a Monte Carlo all projections utilizing our AI powered platform to go ahead and look at the minute chart for the bull case of $4.25, a bull case for the hour chart of $4.99, a bull case on the daily of $7.86, and a bull case on the weekly for $10.28, and an all-time of $7.61 bull case. So obviously we're going up. I would say we're going to be going past $7 to $10 by the end of the next 6-7 months. We're going to see that. Okay. What question was that? Did I skip your question? What question? Sorry. What question? Sorry, I don't know. So now let's go ahead, take a look at institutional ownership, ladies and gentlemen. We can see that institutions now have broken out of the trend line. They own the stock now, 193. We have approximately, let's pull it up here. We have approximately $292 million invested in Clover from big money. These are institutional investors that are purchasing Clover. Again, you have access to how much institutional money have, lifetime access. You see how we have everything? It's a one-stop shop. Okay. Let's go ahead and score this. We have a bullish score of 6 and a bearish score of 3. This is incredibly useful and incredibly powerful. I'll give you an example. Let's say if you want to look at Humana. If you look at Humana and go ahead and do an institutional ownership analysis and do a scoring system, you have a bullish of 4 and a bearish of 5, overall bearish. So obviously Clover is pretty damn bullish, right? So institutions definitely are starting to love Clover. In fact, if you go to Alignment Healthcare real quick, and go ahead and do an institutional ownership graph scoring system, you got a bullish score of 9 and a bearish score of 0, overall bullish. So institutions are buying up Alignment Healthcare. In fact, Alignment Healthcare, if you go ahead and look at the institutional ownership percentage points real quickly here, you can see the ownership percent is around 92.08%. Versus for Clover, if you look at the institutional ownership for Clover, ladies and gentlemen, it's the institutional ownership, ladies and gentlemen, is just a measly 18.94%, right? So obviously, it's going to be more, and sadly, retail investors are going to sell their shares. So ultimately, we are finally free cash flow positive on a fiscal year basis at around $80 million, whatever we said, right? I know this will update soon. We went ahead and looked at analyst estimates. Analysts understood the assignment. They know. They estimated, though, for this year, for 2025, they estimated 1.7 billion. We are actually at 1.8 billion. So our revenue is actually higher than what the analysts were estimating, even on the high side. So that's pretty impressive, which means that we are going to get upward revisions. But analysts are a little spooked out from the SG&A. So they're most likely going to update the SG&A type of ordeal. But if you go ahead and take a look at net income, analysts successfully anticipated that we are going to be profitable in 2026, which makes sense because the payment systems become profitable in 2026 because of the CMS star payments of 4-star ratings. Ladies and gentlemen, this is by far, I'm going to be releasing this shortly. It's a tough one, but this is very expensive. This looks at smart money and dumb money for Clover Health. Smart money is in blue, dumb money is in red. And we can run the analysis here. And if we run the analysis, you can see an arrow pointing down here saying smart money has turned bearish, where dumb money became confident and smart money became not confident. And the stock price dropped anywhere between $7 to $10, all the way down to 60 cents. Ladies and gentlemen, I am proud to announce to you that in our smart money, dumb money market sentiment analysis indicator for Clover, smart money has just turned bullish for Clover. You know how crazy this is? Let's look at the stock price is about to explode. Let me give you an example of when smart money has turned bullish for a stock that you all know perfectly. Let's go ahead and take a look at Palantir. We search Palantir and we go ahead and run the analysis. Palantir's analysis, dumb money turned unfortunately bearish in 2022 of Q1 when the stock price was around $13 to $15, and then it dropped all the way down to $6.50, 42 cents here. And all of a sudden, in Q2 of 2023, smart money turned bullish at a price of around anywhere between $13 to $15. This is like the Q2 2023. Ladies and gentlemen, as soon as smart money turned bullish, what happened to the stock price? It went from $10 to $15 to over $100. Do you understand the power of the stock terminal. Normally, this data is nasty. It goes up and down, up and down, up and down, up and down. But your boy knows how to do statistical analysis and Z-scoring system, as well as computer science. And I was able to strategically create a very clean signal that cleans the Wall Street BS and give you something that it's like Apple-like a child can understand this, okay? This is the power of our platform. This is the power of the All Stock Trades platform. We democratize financial information. We distribute over 2.5 billion outputs of institutionally graded data around the world. We have access to the most essential software at the most affordable price, an educational platform that will take you from zero to hero, and a net worth of other lifetime members from all around the world that have over $44 million of net worth together. And that's only a 30% response rate. I assume they have more. Ladies and gentlemen, we have one of the best platforms out there that works. And you can take it from me, someone who went from homelessness to medical school and soon to becoming a surgeon. Ladies and gentlemen, this is the platform that you have not seen like any other. Okay. So, here's the QuantFlow terminal, and we can go ahead and make this on another video just to respect the time. QuantFlow wise, we're gone down to hell. And like I said, we're still on this downtrend here, and we're still below this line. This is our proprietary All Stock Trades QuantFlow. Again, all part of the stock terminal, right? All part of the All Stock Trades lifetime access. We have the sentiment analysis for Clover. We can go ahead and look at that. We can look at, the news is going up. The news is going up. We're about to become bullish again, right? Run the learning and machine learning analysis. We get a bullish, baby. But here's the thing, though. Let's go ahead and take a look at, let's take a look at Humana. We go ahead and look at Humana, and we look at overall 3 months. You can see how it's turned bearish, right? You see this bearish. You see how beautiful this is, how it tells you how beautiful, the analysis is. This takes over hundreds of thousands of articles, and it goes ahead and puts it in our proprietary sentiment analysis machinery, and it's able to sophisticatedly understand what people are saying and graph the sentiment of Clover. In fact, if you go ahead and take a look at any stock, Clover, Apple, Palantir, back here in May of 2024, April, May, you could see it was incredibly bearish. But what was the stock price of Clover back in May? Ladies and gentlemen, the stock price was around 60 cents. Imagine having this powerful tool at your disposal. This is the power of the platform, right? Here's also the progression analysis. Now that we know this, let's do another price target. We go ahead now. We know Clover is going to grow 37%. We'll do that. We know the revenue is going to be, what do we say the number was? Let's go back. Let's go back to our Google Doc chart. You see all this we have up here? What is it? Right here. Let's go to our progression analysis chart. You see how much we have? We go here and we hit enter. Ladies and gentlemen, I'm expecting, based off of this and this and this, the 37% growth rate. Ladies and gentlemen, are you watching this? Are you seeing this? We're going from $5.41 all the way up to $125. This is going to be the 10-year progression. If you want to be really conservative or baseline conservative, we could take the lower number, $325 to $75. Are you seeing the power of our platform? Watch this play out. This is why the lifetime access is going to end up being $15,000 to $25,000. And even institutions are reaching out to us. For folks that, by the way, for folks that are institutions that are reaching out, we do have a special package for you. If you would like institutional access as of now, what the prices are, institutional access, which means that you can use the data for monetization. It's $25,000 lifetime access. For institutions that are watching, in the next 5 to 10 years, lifetime access for institutional ownership will be anywhere between $85,000 to $100,000. This is a one-time payment, lifetime access. This is for institutions. We're talking equity firms that want this type of software at their disposal. We've already sold 2 lifetime access packages for institutions. I'm not going to be naming them, but thank you for the support and believing in the platform. And you have it for lifetime, right? So there it is. There it is, ladies and gentlemen. So there it is. We have this. We're going to make another video for the thing. And I bought this cup a long time ago. It says, things are going to work out, right? And it's in Clover green, right? So So there it is. Let me go ahead and make sure everything's good. I think we pretty much talked about everything that needs to be discussed. Yeah. So there it is. Let me go ahead and go through the comment sections real quick. Shalom, brother. Shalom. Shalom. Use revenue if you have a negative. Exactly. Yep. There it is. Yep. Robert, you can. It's very dangerous though. It's very dangerous. I don't recommend using it for. You got to be careful, right? There it is, guys. So also shout out to all our viewers. We have a 619 viewers on Twitter and 183 viewers on YouTube. Ladies and gentlemen, that's 802 viewers altogether. God bless you guys. I hope that we're gonna continue moving forward, and I'm very bullish about these numbers, and I anticipate Clover to explode, especially in Q1 of 2025. Like I said yesterday, I'm not really too surprised today. I'm not really too surprised, but Q1 of 2025, we will see an explosion. I will be surprised if we don't. And also, oh yes, mention your LinkedIn. Yes, you see, my own people, I love you guys. Thank you so much. So yeah, so for folks that are watching, please, if you can, go to the right. Okay, so let me go here. So this is our LinkedIn here. I need 150 followers for LinkedIn in order for me to live stream on LinkedIn. So normally this would have been live streamed on LinkedIn, but the problem is I need 150 followers, right? So I'm going to put, if you can I'm going to put the link down here. Yeah, that's around my average. Good job, noob. You're no noob. Here's the link. If you guys can please, definitely give us a follow. We need 150 followers. It's like a LinkedIn style rule. LinkedIn style, right? It sounds like a name, right? It's like a LinkedIn rule, and we really can't do live streams there, so it'll be really helpful to democratize this. But yeah, definitely help us out there. But yeah, ladies and gentlemen. Appreciate you, JC. Yeah, I mean, don't forget that. Yeah, I appreciate, you see, it's great. You built a wonderful community when they want to encourage you to grow, right? Because other people need to see that there's a way out of poverty. We have people now making $20,000, $30,000 a month, albeit risky, because remember, covered calls are not a good idea right now because this stock is going to explode, right? And I definitely should, right? Considering the coverage we have on their platform. I usually don't like to bother Andrew and Peter. I tend to, but I will make an exception. I don't ask for a lot, right? So I'll ask for that. Yeah, guys, I put God first in everything I do. You can see who I am and what I've done in my life, and you can see what we offer. I want to create a big, vibrant community. A big family. Again, I never grew up with family. I was homeless when I was 15. You guys are all my family, right? The Tucson community has been my family. My mentor is my family, and I've been so blessed. And because I've been blessed, and to those that have been given much as expected, and to those that have been entrusted with much more will be asked. It is my duty to give back to what the Lord has given me. So I created this platform to be able to show you what Wall Street has been doing, because you can't do this alone. You need this data, as you saw. How can you calculate this information? How can you set price targets without knowing this information? How can you set price targets without knowing how to use this information in terms of knowledge, which is why we created the educational division? How can you go ahead and use this by yourself? That's why we have the members where they can communicate and talk amongst each other and ask questions. I tried to think of this from every angle. How can I take somebody from zero to hero? Because I came from zero and now I'm on my path to becoming a hero, right? And I'm trying to share this path with all of you. God bless you all. And I appreciate everything for all of the subscribers that have supported our channel. God bless you all. And I promise you that I'm going to continue working hard for each and every one of you, right? For every dollar that is given to the All Stock Trades platform, I will 10x my time and investment to this platform, right? I can give you my word and my oath. And you know that for people that are in our lifetime access. You see me up at all hours. I'm working hard. I only have if I'm lucky, 50 years maybe left, in this world. Who knows, right? I'm going to give to you everything I got because that's what makes sense. Giving back, okay, right? Glitch. This was one of the biggest in 2023. One of the biggest responses regarding payment plans. Yes, we do. I'm honored and happy to announce that we do have a partnership with Affirm. Affirm allows you to make payment plans. We also have one with PayPal and other services depending on your credit score. But Affirm is our big one. It's only available, I believe, in US and Canada. The other ones, maybe in the UK. But I've worked every nook and cranny trying to figure out how can we create a payment plan system to make it accessible for everyone, right? And this is still ongoing in development. So we do have that, right? All right, ladies and gentlemen, have a wonderful Thursday. God bless each and every one of you. And I cannot wait to see what Clover does in the next 10 years. And I can't wait to see the progress we all make as a community together by putting God first in everything we do, right? God bless you all. And I'll see you on the next one because fortune calls, doesn't it?
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong.